Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's December 16th, and this will be our chart lesson for today. A couple of things real quickly. This is going to be um, obviously, this is the last chart lesson of the week because tomorrow's Friday, and I don't do them on Friday, but this will also be the last chart lesson of the year. So I'm going to start my vacation next week, and I won't be back until after the first. I think the first falls on a Saturday. I'll probably be back in on that Monday, so I believe that's the third. I don't have my calendar in front of me, but I believe I will be back on January 3rd. If not, it'll be the following day. I'm going to be out of town, so in case something happened with travel or something and I got delayed, I may be a day behind. But we should start a regular New Year with our regular week on January 3rd, if I'm remembering that right. I'm pretty sure January 1st is on Saturday, so uh, and I'll be traveling home on Sunday, so I should be back in the office on Monday morning. That's the plan anyway. Just in case I'm not here Monday, I'll definitely be back by Tuesday unless something crazy happens. But anyway, let's just wanted to give you a heads up on that so you know where I'm at. I won't be reading emails unless it's emergency or something. So please hold your emails you send to me unless it's something critical. No chart questions or trading questions or anything like that if you don't mind, just so I can get a break and not have 1,000 emails piled up when I get back to the office and kind of can start fresh without a lot of catch up to do. If you don't mind, I'd appreciate that. Um, but let's get to the chart lesson and then we'll wrap up this year, basically. Wrap up this week and this year. It's just gone by really quick, so I don't know where it went. But anyway, you can see we're back inside that blue range again, and we actually traded well outside of it today. The volatility is still crazy, as you can see. We traded way up here, then traded all the way down here before closing back right around that midline, and obviously we couldn't trade outside. We didn't have an open or a close outside of that resistance area, so that's really strong resistance for now. The support seems to be down here around this level. I'm not sure exactly what those price levels are. Support seems to be around 46.28, and even though we've traded above it a few times. The strong resistance, the critical level seems to be around 47.04. So keep that in mind. Be careful trading into those lows or those highs because you can get whipsawed, and you can see it happens quickly, and they're usually pretty strong moves because just as strong as we were up yesterday, we actually backed off of the lows quite a bit. We rallied before the day was over. So I noticed we bounced off that fib line, and this is our envelope strategy is what this is. In case anybody wants to know, people always ask me what are those lines, and I like to use this on my daily chart because when you get above this purple, you tend to be in oversold or overbought territory, and it's not long before prices will correct. And if you get down below the purple bar on this side, then you're in the oversold area, and it's not long before you bounce. And you can see how that tends to work. We actually got all the way up into the brown here before we corrected this last time. Here's the time we got down in the brown. When you get down in the brown, you can almost guarantee we're probably going to see a correction pretty quickly when you touch that brown line. And if you go on back here, you can see usually we're in between the purples as the critical ones. But it's definitely a nice tool for kind of predicting the turns and so forth. But again, that's our envelope bands on there. That's our envelope strategy. If you're interested in that, you can go to the website and read about it. But anyway, there it is. Let's go over to the daily chart and get through the trades. Okay, here's our 2000 tick intraday chart. And you can clearly see we're in a large downtrend here. The cayenne blue or whatever that color is, it's pretty much the main trend. It didn't help you a whole lot. You couldn't really find it till after 10 o'clock, and even then prices never came back to it, so it doesn't necessarily help you a whole lot. I put it on there just so you could see it, and you can see where the midlines come into play there all the way down through there. And so it's definitely valid. but it doesn't help you a whole lot. So I didn't really trade with it. I've traded, this is the way my chart looked. I had the blue, I had the yellow, the blue, then another yellow, then another, this kind of grayish blue again, and then the blue going up here. And that's the way I traded it. I use those particular trends. So let's zoom in. You can see the bigger picture there. Let me back out just a hair again. You can see the bigger picture there, how I played that. And so you might have actually looked for a measured move here too. I never measured this to see exactly where it was going, but you can see that got you a measured move target down here, which we easily surpassed. We went quite a bit further than that before we bounced. This thing got really ugly here for a few minutes, maybe for a couple of hours almost, and then we bounced. And not much of a bounce, weak bounce. But you can see that. I'm going to remove these just so we don't clutter up the chart. But let's zoom in again here and we'll get through the trades and wrap this day up. But 7 o'clock came right down through here. And then we bounced. No real trade setups here. I think it's too dangerous to trade that. I mean, you don't really have this trend line confirmed or anything yet. So it's really too early right there at 7 o'clock. But we drop on down. You actually try to go higher once. You never break lower, but then you try to go higher twice. You get a little 2-bar matching eye. So technically, that you could treat that like a failure. It doesn't set up right though, so I don't like it. I wouldn't trade that. Again, I'd just sit there and hold tight. And because there is a new swing high there, you could look at this as a first entry, second entry that fails, but it's also, notice the new low, first entry, second entry, short as well. So it's a failed second entry long, second entry short. You made a high here, a little double test. Might even argue it's a triple test. Very bearish bar. Go short right there. It confirms that trend line. Really, you confirm the trend line on that touch, and this just further confirms it. That's a great place to go short. It's a shame that we don't get a very big runner on that. You probably would have got a little bit of a runner here, but not anything to write home about. And then it bounces. And then you drop down, you get a first entry, you move on down again, and you get a failed second entry here. The second entry actually triggered here, but you never get a break lower till here. I don't think I would wait for this bar, because if you do, you're right at the lows and you see you would have got stopped out. But this actually broke higher and turned down. It's a little congested right there. But that's probably going to trap people when it broke lower. If you wanted to, you could consider going short there. I'm not crazy about it. I marked it just so I could talk, so I'd remember to talk about it. But it's definitely aggressive. It's definitely green, and it's even borderline then. So, but I just wanted to discuss that and point it out. We come back again, just a first entry here. We do have a close and a new low in place, not by much, but we do. And we actually make 2 legs down, and I just don't see any way to enter that, unfortunately. And then we make a new low, and then you run up, and notice how prices run right through that EMA. You try to go lower once, twice, it fails. When it breaks higher there, that's a failed second entry short, but it's also a first entry, second entry long. Great place to go long to try to catch a reversal. Easy trade. Doesn't take much heat at all, and you get a little bit of a runner, but it does confirm this flatter trend line and turn back down. And I didn't mark this because technically it's not a second entry, but you can clearly see there's a leg up and then a 2-legged correction and then another leg up, and usually you're looking for a measured move there. And you can see that's a perfect measured move, and look how far we are away from the EMA. So you could treat that like a second entry short right there on a little bigger picture. So I'm going to mark it green, but being that far away from the EMA, very good bearish signal bar. It's only 8 ticks, which is pretty tame for what we've been seeing with this volatility lately. And you can see that was a fairly nice move down. There was a second entry short here, but it's right into that support. It would have worked, but you don't know that ahead of time, so I don't like going short there. And again, you could have treated that like a failure to the upside, and it's almost a repeat pattern of this right here. So if you saw that, you may take this trade right here, but I think you're better off to wait, and then you get a true attempt to go higher again. It looks more like a second entry failure, and you get another nice signal bar. So that's the better place. But if you saw that one and took it, I probably wouldn't argue about it too much. But this was the better entry right here. You had a little more proof we were going lower because you made a lower low, and then you made this double top, which is basically a lower high. And there's another lower high here, but too far down here. Not quite back to the EMA. Just probably not a really good trade. And we can kind of continue to work on down, but you just don't really get a setup in here. Then you bounce. No reason to try to go long down here either, even though there is some support down here. That's the overnight low. This is a higher low, but it's just really too close to the EMA, and you see how it finds resistance there. Just wait until it bounces on the other side, and then you have a failure. I marked this one, but there's a little bit of resistance across here, and this really looks more like a double bottom, but it still looks like two legs up. So you may take that trade, and it looks like it's going to fail, but it doesn't. It goes higher again, and really this almost looks like a double bottom. So you could look at it like first entry and another second entry that fails, and this breaks lower and turns up. I definitely wouldn't wait till the end of this bar to go long, because you see what happens. It stops you out and then goes exactly where you would expect it to go. But when this broke lower and turned and went by you with that double top right there, that's the reason this bar shot on up like that and was such a strong move before it sold off. It was running stops. There's a lot of stops above. Shorts have all their buy stops above this price level in here, especially those two bar matching highs. And so it ran the stops, and that's why that bar zooms up like that. So you may trade that. I marked it green. It's a little aggressive, but if you're a good chart reader, you probably realize with those two bearish bars and the two bar matching high in a downtrend, there's probably going to be a lot of buy stops right above that, because this is going to suck the shorts in twice here. They got sucked in once and stopped out, and then it does it again. They think, okay, I was right, and they jump in again, and ones that weren't quite sure here decide, hey, I better get in, and then they run their stops, and it comes right back where it was thought it was going to go, and then goes higher. So that's kind of what happened there, just to describe that for you. But I don't see any reason to go long there unless you went in on one of those two. And then it runs up, pulls back, still no entry, and you get a break of that blue channel. You run up, you get a close outside. It tries to go higher, but you get a lower high, and again it breaks higher and turns down. Plenty of room back to the EMA. I don't know if I would wait till here and go short. You may let it break lower and see if you can get a limit order entry that gives you enough room to get out, because you can see the support it gets, and sometimes it won't push through like that. It'll just go higher. So you got to have enough room to get out, and that's the key. But with a bearish bar like that, especially breaking higher first after that kind of momentum, if this was the reason I like this one is if you can get in when it's way away from the EMA, because you know it's time to come back, and it's probably going to at least make two legs back before it goes higher, even if it's going higher. And of course it actually pushes through here. I don't see any reason to go long. Runs back up here, and if you had a little better signal bar here, I would have liked to short there on that second entry, but you don't get it. You might say, hey, there's a failure here, but it closes above the EMA, and this looks like a double top. So this looks more like the failure right here. So you got a new high, first entry, second entry, and this one's below the EMA. It still closes above, but you can see we pushed and closed below it now a couple of times. And when this makes a lower high, if it turns down here, you can see they ran the stops and the bottom just falls out of it. All these people that got long over here realize, hey, we're not going higher. I got to get out. And we run on down. You get a close outside, a couple legs to a new low on this channel, and then we bounce again. And you got this one, you get a close outside. It tried multiple times to go higher and couldn't, but you don't get a setup to go short. There's just not enough. There's just not a good enough setup to go short into that support there. Drops on down, chopping along, and you actually just go into another little channel here, or congestion, whatever you want to call it. And you get a failure at the top, but not a very good signal bar. Then a failure at the bottom, which is a great signal bar, but I'd be a little afraid to go long right there. We do have a break of the blue channel and a new low. So if you took that one, again, it's probably not the end of the world, but it's just not a great place to be thinking short. And of course it runs up here and it fails out the top. And again, I don't think you want to go enter on a first entry there. So wait and see if you get a lower high, which you do right here, and look how bearish it is. And so I like going short right there, one tick below. And you see it still, even then, it takes a little, there's some buying still coming in before it drops lower. And then it pulls back here and gives you a failure. Notice the new high, first entry, second entry. We moved a little piece here, but that bullish bar that turns down instantly is probably going to trap some longs looking to pick shorts. And you can see it drops on down. So this one's just not a perfect setup, but it's still a failure, and there's still plenty of room to get out there. So you may take that trade. We come back to the trend line here again, and that pretty much confirms it, but it's just a first entry. So, I'd wait on a lower high, second entry, whatever, and you just don't get it. You just start chopping sideways. But eventually, notice the new high, you try to go higher once, twice, and it's right off the key entry point, very bearish. Just make sure you got enough room to get out before those lows. So you may have to let it break lower and drop a limit order a tick or so back. If you try to get too aggressive, you're not going to get filled. But you could have gotten filled back in this one and gotten out, and then you actually get another failure here and a breakout pullback short. Let me just draw this. I don't have this support line on here. And notice we come back and we try to go higher once, and we try to go higher twice. And we actually, it breaks higher right there, but it doesn't get back to the EMA. But when it comes back there and gives you this very bearish bar, I like going short there, because if it drops down there, it's going to hit the stops again. If anybody trying to get long here, and you can see that they run up. You probably couldn't even get in this trade. I marked it, but I doubt you could even get in it. And technically, even though we broke higher and turned down, this is it's just like another little small congestion. So that's another reason to be a little worried of it. But this is a strong downtrend, and we're continuing to drop lower until finally we bounce here. And no reason to go long here. You get a break, move to a new high. There is a second entry up here, but not a very good setup. You drop down, and there's no setup in there. And unfortunately, this whole way down here, I don't see a single setup that I like. Not one. You might have taken that trade because you might have looked at this as a little congestion, which it is. So you could say, hey, this is a failed breakout, and that's a relatively small bar at only 6 ticks, but that's a lot of momentum on that breakout right there. And so I'd probably want a lower high or something else. And I mean, if you took it, I think you're being a little risky, but this is sometimes more risk. Look at the payoff for taking that risk, because there's no other way to get in that, and the bottom just falls out of it. And so sometimes you might want to take that little extra risk. I mean, it is a failed breakout, and it's probably coming back to the EMA and to test this at a minimum, bare minimum, and instead look at it. I didn't even draw the trend line, but it's a very clear, easy, tradable trend down right there. but no other opportunity to enter it. And you don't want to enter down here, and then you get a little failed break and we bounce again. Notice that you working up, you get a first entry, and then you get a second entry, and it doesn't fail till here, but then you try to go lower again, and now you got a triple test with a fairly bullish little bar, and they probably trapped the shorts here, so it might be worth trying to ride that back up. I marked it green. It's a little aggressive because this has been a strong move down, but everything's in place now to consider a long right here based off of all of these channels here. You got a breaking new low of the yellow one. You got a breaking new low of this blue one. You got a breaking new low of this real tight one. And you don't have you've got a break of this green one, but you don't have a new high yet. So there's a lot of reasons to think we can go a little higher there, even if we don't reverse out of there. It comes back here again, but I'd wait on a higher low because we went lower, and this thing should have gone higher if we were going higher. So now you got to be real careful. And there is a trend line down there, and that's the first close outside. You can't go long right there on that one. But we do get a close outside a new low, and then you get a first entry, and you push through up here, and you get a second entry. So that's a failure right there, but it's too far away from the EMA. But when it comes back and bounces again, now you got a little two-leg correction back to the EMA right there. It's not truly a second entry because we went higher by the counts, but it still looks like a two-legged correction, and I'd still treat that like a second entry. And that's the reason I marked it green right there. I don't know why I was putting another green one back on my thing. But I like that trade. It is aggressive, but again, look, it pays off, and you would have got a runner on this. And you could have got another nice runner. But we run on up, we pull back, you get a first entry, and you pull back, and you get a second entry long with a higher low, and again, everything's right off the key entry point. Nice bullish bar, go long right there. And you see you get another fast move up. And that takes you into the 230. And in case you didn't see yesterday's video, I guess when I switched over to the March contract, for some reason it was showing the close at 2 o'clock, and I didn't catch it for the first couple of days. So there's probably a couple of days worth of chart lessons that I didn't realize it was closing at 2. And so if you got thrown off there, because normally at 2:30 is kind of the cutoff time that we talk about. I think you're safe to trade to about 2:30. And then I don't suggest taking any further trades. I don't like taking any trades. I generally don't trade much after lunch, to be honest with you. And so I didn't notice it until we were doing the chart lesson yesterday. I happened to look and something didn't look right, and I caught it. So if you did notice that in a couple of videos and didn't see yesterday's where I talked about it, that's what was going on. I just missed it, that it was showing the close at 2. I think I forgot to save that 2:30 as my default or something, and so when I loaded the new chart, it just automatically went back to the old 2 o'clock cutoff or whatever. So I hope I have that corrected. But if you notice that in the future, just point it out to me. It probably will only be at contract renewal time, but I think I have it fixed, so it shouldn't do that again. So hopefully we don't have that mistake again. But it didn't affect anything. I just didn't talk about any trades after that when there might have been some. So, but other than that, that's all it was. It wouldn't really affect anything with the chart lessons or change anything. So other than I would have left a couple of trades out. So anyway, I'm not going to beat around the bush. This is 24 minutes worth. We're going to be 25 probably before we wrap this up. So I'm going to call it a day. I'm going to call it a week, and I'm going to call it a year. I'll probably come in the morning. I'll probably trade a little bit in the morning if the market's moving, and I'm probably going to knock off at noon, and I'm going to probably be done for the year. So I hope everybody has a great Christmas, great New Year's. I wish all the best to everybody. I hope it's been a good trading year for you. And if you're still learning or didn't have a good year, just hang in there. Maybe 2022 will be your year that it finally clicks for you and you kind of get this thing moving and kind of start to improve. And it's a slow process. Don't get discouraged when you don't have success right away. Most people fail at trading because of unrealistic expectations. If you've never heard me say that, that's why most fail. You got to have realistic expectations, and this is difficult to learn, especially to learn to read a chart and draw these lines and learn all these patterns and where the patterns are good and where they're not good, because we're not pattern traders. If you just try to trade patterns, you're going to fail. You've got to learn the context of the chart and how to read the chart and understand what prices are doing and where they're heading and how they're going to get there. The key is we may not know exactly how they're always going to get there, but we generally have a good idea of where the targets are and where they're headed. And how they get there is the harder part. But at least if you know where they're going and you know the patterns, you can take advantage of that and put the you can put the odds on your side, and that's the whole idea. We're not gamblers, so we don't want to gamble on any trades. We want very high odds stacked in our favor when we take these trades. And that's the difference between the red and the blue ones versus the green ones. The green ones are not. They're setups that we watch and setups that we like, but generally there's something about them that makes them a little more aggressive and a little less high probability, and so you have to be careful with them. But I still like to mark them because people ask me about them, and some of them are worth taking. Don't get me wrong. I showed you a couple of them today that were worth taking. If you lost, it was very low risk, but if you win, it's very high payoff. So with higher risk comes greater rewards, but you want to be profitable more than you want to be. This is not get rich quick or try to find fast trades to make lots of money. You want to make money consistently every day, and so keep that in mind. But I'm going to wrap it up. This is getting very long, and I want to end this up and end up our year. And again, I wish everybody the best. Happy New Year, Merry Christmas to you, and we'll talk next year. This is Mac with PriceActionTradingSystem.com, and we'll see you next year.